Nikki, mining companies have known for a long time that women make smoother drivers and it's cheaper to replace tyres. The argument about women in boardrooms has also raged for decades. There seems to be a new report about this topic.
That's right. It's out from the Credit Suisse Research Institute. And what's interesting about it, as you say, there have been a lot of reports, and many of them, McKinsey's are the best known, tend to show that where you have women on boards, you tend to get better financial and stock market performance. And what is interesting about this latest report is that it looks in a little more depth as to why that might be. Just because you get a correlation, two things happening at the same time, women on boards,
exactly.
Relatively good performance doesn't mean that one causes the other. And this report comes up with two quite interesting observations. The first is that share price performance, and it looked at a lot of companies, about 2,400, outperformance tends to come after the stock market or the market upheavals of 2008. So that's one. And
these are global companies all around the world.
They're global companies all around the world. And up until 2005, 2006, 2007, not much difference. After 2008, very sharp outperformance. For large companies, about 26%. That's a lot.
So before the bubble burst, boards with more women on them tended to underperform the index, and out of the crisis, they tended to outperform. Is that right?
Broadly speaking. And the second thing is that in looking at the possible explanations, they notice that women, where there is at least one woman board member, gearing in the companies, that's a degree of debt, it tends to be lower, and also tended to come down much more quickly after 2008. So they come to the very tentative, very carefully sort of hedged conclusion that perhaps women, because women tend to be more risk averse, that filters through to the boardroom. And that actually seems to be one of the more sensible conclusions to come out of all this debate.
That's right, and the data of course shows that there are more women represented on sort of consumer related and retail related boards, which I guess tend to be less geared and a little bit more conservative. But was it shown across other industries as well?
Well, it works at the other end of the spectrum too, in the IT sector, where I think you probably have a lot of small businesses, a lot of quite aggressive growth oriented strategies. Women are very, very heavily underrepresented. So it suggests that the risk-taking factor or the risk aversion factor does tend to weigh in too.
Right.
Yeah.
So with all the caveats, however, if an investor thinks that we're back off to the races for another boom time, they should avoid boards packed by women. And if we think we're in for a long, drawn-out recession, the more women on the boards, the better, it seems.
Well, yes, and policymakers should perhaps pay attention too and have women on boards in risky sectors, but perhaps be less enthusiastic about the policy if we're going into another growth phase at some stage.
Very interesting indeed. Thank you very much, Nikki.